Sorry, I wanted to record that. Okay, so haven't disposed of any motor vehicles either. So now that means you take the cost at the beginning of the year, you add up the cost of additions, none. You deduct the cost of disposals, none. That means your cost at the end of the year is still 427,428. Okay, so now let's go and have a look at the movements on the accumulated depreciation account. So your account that has a name of motor vehicles, accumulated depreciation, that is the name of the ledger account, had an opening balance at the beginning of the year of 59,365. But remember again, this is now in brackets, so it's a minus. And then we calculated and recorded depreciation for that year on the motor vehicles of 142,476. So that means that figure, the opening balance, is a minus. This is a further minus. So it means we have to add the two minuses together. So if we take the 59,365 plus the 142,476, that gives us minus what? Minus 201,841. Can you just stop for me? Is that correct? Yes or no? Yes, thank you. Okay, and now we're going to double check, ladies and gents. Now we're going to double check. We've already calculated that figure, but now we're going to double check whether that is correct. How do we double check that? We simply take the cost, the balance on the account called motor vehicles, cost at the end of the year, which is the same as at the beginning of the year in this case. That's a positive. Remember, that's a positive. Minus this negative, minus 201,841, which represents the balance on the account called motor vehicles, accumulated depreciation. And if you deduct that figure from the cost, that must also give you 225,587. Does it? Yes or no? Thank you. Right. So that is, thank you. There we go. So that is how you draw up your the note, the property, plant, and equipment note. So let's go and have a look at this one, the office, which we now called office equipment. This is a more complicated one because it's got disposals and additions. So let's have a look at this one, and I think then everything should be clear. Then we're not going to look at the other columns. Like I think I mentioned before we started the recording, sorry for the late start to the recording, you'll have a column for each category of property, plant, and equipment. So this company has got 4 categories: motor vehicles, office equipment, plant and machinery, and just furniture. Okay. So now let's have a look at the one that deals with office equipment, right? Again, remember what IAS 16 tells us about the note. Well, it tells us a lot of things about the note, but one of the things about the note is that you have to have a reconciliation between your opening, what they refer to as an opening net carrying amount, and that consists of cost and accumulated depreciation. You must reconcile that with your closing net carrying amount, and that also consists of cost less the accumulated depreciation, right? Or less accumulated depreciation and accumulated impairment losses if you had such a thing. Okay, so simply we are going to start at the beginning of the year. We're going to look at the 2 accounts that combine to give us the carrying amount. Those 2 accounts that combine to give us the carrying amount is the account called office equipment, cost. So we're going to have a look at what is the opening balance at the beginning of this financial year on that account. We see it's 908,286,000 rands. Then we go to the other account that make up the carrying amount of the office equipment. That is an account called office equipment, accumulated depreciation. So we go and have a look at the beginning of the year, what was the balance on that account, right? So there we've got the cost at the beginning of the year. There we've got the accumulated depreciation at the end of the year. at the beginning of the year. Now we've got to go and see what kinds of movements would have affected the opening balances on those two accounts until you reach the closing balances. Right. So let's perhaps just look at the cost. Let's just look at the cost. Okay. Forget about the accumulated depreciation for the time being. Let's just look at the cost. So here we've got a cost of 908,286. So let's see which of these movements will affect the cost. And now I need you to answer me again. Will the disposals affect the cost, the balance on the cost account? Yes or no? Yes, thank you. Yes, it will. Right. It will affect the cost because if you are disposing of an asset, in this case, one or more, or in this case, all of your what is it? Office equipment, then obviously you must get rid of the balance on that cost account, right? So that does affect it. So we're going to take that 908,000 opening balance, and now we see when we disposed of that, we had to deduct it from that figure, right? We're getting rid of that balance. So that does affect the cost. Now let's have a look at this one. Depreciation for the year. Depreciation. Now this may be a little bit of a trick question, but maybe you've got it spot on. Does that affect the cost? Yes or no? Does it affect the cost? Yes or no? The depreciation expense for the year, does it affect the cost? This time you're not correct. It doesn't affect the cost. It only affects the accumulated depreciation. So your depreciation charge for the year does not affect your cost. Does that make sense? Cleaner? It affects your accumulated depreciation, but it doesn't affect your cost. Okay, so that means you are not going, oh, thank you. So that means you're not going to add or deduct it from the cost. Like I said, for the time being, we're just ignoring the accumulated depreciation. So at this stage, we've got the opening balance on the cost, less the disposal, the cost of the item that we've disposed of. Then let's go have a look at the additions. Do the additions affect the cost? Yes or no? The additions, in other words, the assets that you've acquired now, do they affect the cost? Yes, there we go. This affects the cost, right? Doesn't affect the accumulated depreciation. This affects the cost. So now we've seen which ones affect the cost. So we can take our cost at the beginning of the financial year, 208,286, less the cost of the items that we have disposed of. So that is minus 908,286 plus the cost of the items that we have acquired. So the cost of the addition. So we take that figure, less that figure, plus that figure. So our cost, the balance on the account that is called office equipment cost at the end of the year is 950,000, right? Those two negated one another, 908,286 less 908,286 plus 950, so that gives us total cost, balance on that account at the end of the year of 950,000 rands. Let me ask first, are you happy with that, yes or no? Very happy. Oh, that is good. I'm so glad. Thank you all. Good. Now let's forget about the cost because we have dealt with the cost. We have not dealt with the cost. So now let's only focus on the accumulated depreciation. So now we look at the account called office equipment accumulated depreciation because that's what we are now analyzing. So at the beginning of the year, at the start of this financial year, 1st of August 2006, it had a balance of 78,988 rands. Now let me ask you the old trick question again. Would disposals, we've already seen it affected your cost, right? You have to take the cost of the item that you've disposed of. You have to take that out. Now let's only focus on the accumulated depreciation. If there are disposals, would that affect your accumulated depreciation account? Yes or no? Take a chance. Think about it. Yes, Zuki, yes, there we go. Yes, it does. Because if you are disposing of an item, you must get rid of its cost, but you also get rid of the balance that relates to the accumulated depreciation. So that will affect it, right? That will affect it. So now let's go and have a look. We started with a balance of minus, remember that's in brackets, that's why the bracket. Why it's so important to have brackets if it's a negative? We started with a minus 78,988, but now we are getting rid of that balance. So this, you can see, is shown as a positive. So it means we have to deduct the accumulated depreciation on the item that we are getting rid of from the opening balance. Right. Now let's see what affects the accumulated depreciation. What about the depreciation charge? The depreciation expense for the year. Does that affect the accumulated depreciation account? Yes or no? Does it affect the accumulated depreciation account? Where does your credit go if you record the depreciation? The debit goes to the expense, the depreciation expense, but the credit goes where? To the accumulated depreciation account. Zuki, correct. So yes, it will affect it. It will affect it. Let's go to the next one. What about additions? Remember, we are now only talking about accumulated depreciation. Will the additions during the year, will that affect your accumulated depreciation? Yes or no? Okay, come on. Kino, what would you say? Does it affect the accumulated depreciation, the additions? No, thank you, Zuki. It does not. Thank you, Landela. Yes, yes, you're correct. No. Okay, no. So you're correct, Landela. Zuki. Mpino, you should also answer. You asked the question. Okay, so that doesn't affect it. So now let's go and have a look at the balance at the end of the year. So we started with an opening balance of 78,988, which is a negative. We've got a positive here. We took out the accumulated depreciation on the item that we have disposed of. So we deduct it from that figure. And then we add, because this is again a minus. So a minus plus a minus is in effect an addition. Or you add the two together, plus the 169,928. That should then give us the closing balance on the accumulated depreciation account at the end of the year. So, ladies and gents, can you please type for me yes or no? Does that add up to that figure? Yes or no? Yes. Okay, so that adds up. Fantastic. Thank you. So now let's go and complete this. Now to determine the carrying amount at the end of the financial year, what do? We take the cost at the end of the year. In other words, the balance on the account called office equipment cost minus the balance on the account called office equipment accumulated depreciation. So 950,000 less 138,333. That must then give us 811,667. Right. So that is our carrying amount at the end of the year. Does it add up? Yes or no? Yes, okay, thank you, but now we must still go and double check it. Thank you, Landela, as well. Now we must still go and double check it. Now we're doing it the other way around from the first column. So how do we double check it? We take our carrying amount at the beginning of the year, 829,298. So we take the carrying amount, which is a positive, minus the disposals, the carrying amount of the disposals, right? Carrying amount of the disposals minus 797703 minus 169. Remember, now we'll be taking all of it into account because we're talking about the carrying amount. So minus 169,928, which is in brackets, so it's minus, plus the 950,000. So if we do that, it must also give us 811,667. Does it? Yes or no? Yes, thank you, Zuki. Thank you, Landela. Thank you, Kino. I'm sorry, I'm having a little bit finding it hard, but you can educate me. You can teach me when we see one another how to pronounce it correctly. But anyway, so it adds up. So that means you've double checked it. So that 811,667, you can calculate it in two ways. You calculate it the one way, and then you check it the other way. So the one way that you calculate or check it is to take the cost at the end of the year minus the accumulated depreciation at the end of the year, which gives you the carrying amount at the end of the year. And then you can double check that by simply taking the carrying amounts into account. So you start with the carrying amount at the beginning of the year, less the carrying amount of disposals, less the depreciation expense, plus the additions. Right. Okay, that was a mouthful. Did that answer your question? Gina, are you happy? Or at least satisfied? Okay, you're most welcome. Any other questions from your side, students? If there's anything else that you want to ask, you're most welcome. Like I say, you're even welcome to say in person. I'd like to hear your voices. I'm glad you're very happy. That makes me happy.